And taking a closer look at what's playing itself out in that market scene, there's Robert Towell from Sasfin Securities. Rob, always a pleasure. Good afternoon.
Afternoon.
All right, Rob. Well, today is upbeat screens all around. I'm actually keen to understand what would have changed from the real difficult and dull Monday and Tuesday that we had to what we're seeing today.
I think firstly that the foreigners and a lot of investors started going long South Africa before the elections, while the rand was at about 19, and I think that the good rally, especially in the banks and some of the insurers, etc., which have rallied really well in the last week and a half. You saw some profit taking come in. So I think profit taking was one of the reasons you saw a lot of selling and that rand weaken. And then obviously the dollar's been firm on its own as well, which also pushed a little bit weaker on the rand side. So between the two of them, I think you saw quite a lot of profit taking and selling coming in. And then secondly, you've got that India is joining the international bond markets, and other emerging market bonds are going to be losing out there. So there could be some of that as well coming in, where people have to sell some South African bonds to move the index into the Indian market as well. So there are about three things happening there, which you saw a big sell-off in South African local equities, especially on the bank side. But today you've seen a recovery again. You're seeing buying come back into South African equities and the banks, and relatively firm across the board again. So I think those three things were one of the, pushed that market lower over the last 2 days in quite high volume.
I must also ask you about the rand there. It's at 18.47 to the dollar. I think you had heard me earlier. I think it could certainly be better. I'm very wary of actually looking inward for the fall that we're seeing in the rand right now. Is it possible that based on more hawkish commentary coming from Jerome Powell, that the dollar actually strengthened?
Well, I think so. I mean, he did say that inflation is coming under control, which was very positive. Although he said because of the job data and because of the economy, they can take their time in, making decisions about the interest rate. So I think, that left it out that there might only be one interest rate cut this year, but I still think we will get that interest rate cut, in this year. But it did push the dollar a little bit stronger. So, the rand is under a little bit of pressure, but I do think the rand will come back. We also have to see if, on the GNU side, if the South Africans can, get the Gauteng provincial government going and agree there. I think that will also be quite positive for the rand if Gauteng does, come to terms and, sort out the GNU and the provincial level there as well. So we'll see in the next 2 days if that happens.
Let's also look at the oil. They're 86.34 to the dollar. Brent dollars there, sorry, per barrel. I'm thinking of currencies now. It's very interesting just looking at this because this amount has edged up very slowly. But Robert's closer to 90 than it was to 80. And I'm wondering, what's happened here? And really, is this all about that European summer?
Well, obviously there still is a lot of problems in the Middle East. You've still got the Houthis that are pushing rockets into the blowing up airships, etc. And cargoes that have to go around Africa now. So you've seen an extra cost in shipping, and the extra cost in shipping is also pushing up the oil price and demand for oil. So that's one of the issues. Then we've had quite a warm summer in Europe. So I don't think that's a huge drive for the oil price. But economies are resilient, and therefore they are going to be needing oil. And OPEC has been keeping supply relatively restricted, which they're going to keep until December. So if world economies do start to tick over and start to recover, you will see an uptick in that oil price. Does it get beyond 90? I don't think so. I don't think the world economy is strong enough yet. But it's not the worst thing in the world to have a slightly firmer oil price, as long as it doesn't start to become inflationary.
Look at some company news. Robert's a rather thin one there. But Sibanye came out letting us know that they've cut 11,000 jobs there in the last 18 months. It's quite a number. I'm wondering, if this does speak of a leaner Sibanye in the future. And this might be something that investors want to hear.
I think investors will be happy with that. I think that platinum price below 1,000 and palladium below 1,000 has been putting pressure on all of the platinum miners, and it puts pressure especially on the platinum miners that have got debt. and therefore you have to try and cut as much costs as you can out of your business. So Sibanye has been, at the forefront of, trimming its South African businesses and closing certain shafts. So they've had to, retrim that workforce and get it much smaller. So it is a positive, but you do need that platinum price and palladium price to tick up above 1,000 at least, and for a considerable time. So every time it gets there, 1 or 2 days, and then it drops below 1,000. So the platinum miners really need that platinum price above 1,000. And Froneman did say though that platinum, is structurally in a very difficult place at this stage. So you do need to see car numbers start to pick up. We saw the local car numbers were very, very weak, and worldwide, the ICE vehicle numbers are not fantastic. So you do need to see, more vehicle sales come through for the platinum miners.
We also had Bidvest today come out to tell us about, an acquisition there also, but also giving us a voluntary announcement of their financial services division restructure. Rob, can you tell us exactly what's happening there?
Bidvest just adding on a bolt-on acquisition. They've got a very broad industrial business, and this is on the hygiene side. So I think that just bolts onto Steiner Bidvest as well. So it helps with growing that business. And it's nice to see them doing a bolt-on acquisition into that area. And it gives you positive outlook into where they see South Africa moving, and if there's still growth there. So that was a very positive announcement. On the financial side, yes, they're going to restructure that. I haven't looked at it in a lot of detail, but the Bidvest Bank, has helped Bidvest in general, but it's not something that is a main contributor to the business, and maybe it's something that needs to be restructured. But I have to look at that in more detail.
Very interesting indeed. Rob, I want to get your stock pick in a bit, but first let's reflect on counters that have found favor with your industry peers.
I'm picking a local company with this new dawn we are experiencing. Cashbuild. If you look in the last few weeks, a lot of the retailers have bounced quite hard. Cashbuild hasn't. Things are currently still tough in the home improvement sector. Think about the lack of demand for building supplies as people spend money on improving their houses. I mentioned that building is expensive relative to existing houses at the moment. But at some point, I do believe that if the economy gets stronger over the next few years, people will have more discretionary income. They will spend that income on improving their homes, and that will benefit the likes of Cashbuild. So tough today, but the whole point about investments is sometimes you need to buy things before you see the light at the end of the tunnel.
Spear Property, they focused in the Western Cape. Since COVID, they've actually tracked the overall, the all-share index, which is not bad for a property company. They're giving you an historic yield of about 8%, but there's more to my thoughts than just value. With our new dawn, as JP just mentioned it, if it doesn't work out, it doesn't matter, because Spear's in the Western Cape, and they've been handling this dire economic situation very well by being focused in the Western Cape and doing very good capital allocation, being in the right sectors, whether it be industrial or retail.
I know all the stories today going around about Standard Bank and the potential security breach there, and everything going on social media. Standard Bank says there's not a breach, but that's not the reason why I'm choosing Standard Bank.
Yeah.
I mean, I know these shares, all the banks have run quite hard, but I think they still show value. So maybe to buy into a little bit of weakness like we've seen today might not be a bad thing. I mean, it's sitting at an 8 price earnings ratio, it's got a 7% dividend yield. So despite the fact that it's run from 175 to over 200 over the very short time space, essentially on the back of the GNU and the political dispensation in South Africa, I think over the medium term, these shares still show a lot of value. So I'm taking Standard Bank.
All right, Rob, let's talk on those. Cashbuild, Spear Property, as well as Standard Bank.
Well, starting on Standard Bank, we like the banks. Our stock pick over the last few weeks has been FirstRand. It's done exceptionally well, over the last 2 weeks. And we like Standard Bank as well, paying you very good dividends. So, I agree with that stock pick. I think, with a little bit of a sell-off that we did see yesterday, there still is upside, although they have run a lot. So, I don't think the upside is as good as it was 2 weeks ago. before the elections. But something that we will definitely hold in our portfolios. Going to cash build, it's quite early to enter cash build. They've had a lot of problems in that sector and the building sector in general. It's been under immense pressure. And they are on the lower end of the building side. So the Bucky Brigade, which comes up, picks up a bit of cement to fix small houses, etc. So the LSM purchaser is a much lower purchaser in cash build. So we think it's a little bit early in cash build. If you want to go to that into that sector, I prefer at this stage Towell, which I think as you get a recovery in building and houses, Towell's on a slightly higher level, and I think they'll do slightly better. Well, a little bit earlier they'll do better than cash build. And then the third one, Spear Property REIT. We like South African property. It's given you a very good yield while you wait for interest rates to come down. Spear's well situated in the Western Cape, and we don't own Spear at this stage, but I think it's a good asset and giving you a yield while you wait for that interest rate, hopefully at the end of the year, to come down, and you'll see a bit of an uptick in all the property counters. And they've had a good run property in the last few weeks in South Africa, and we think there's value in South African property.
And which counter do you love today?
Well, I'm still sticking with the banks and with First Rand. As I said I think last week, that we took a little bit of profit out of First Rand when it ran. But in any weakness, I think that you can buy the banks. Right now, up at 78 Rand, we're probably fully priced. But, if we saw any weakness coming into the banking sector, I would add to that position. So First Rand is still the best pick in our banking side, and it's got good exposure to South Africa. And we think that South Africa still has some good upside over the next 6 months to 18 months.
Brilliant. And thank you so much for being with us this afternoon, Rob. Always a pleasure. That was your midday markets update with Sasfin Securities, Robert Towell.